All right, welcome back to Market Day Report. I'm Scott Shelody, otherwise known as the Cow Guy. Let's jump right in. Let's not waste any time. Let's see what these markets are doing. How about corn? Let's bring up that corn table. Well, corn is off 2 cents. Well, no, corn's off 3 3/4 cents at 7.44, and a market I believe was limit up earlier. So 3 3/4 cents lower, 7.44 last in that May contract. But look at this, got a 14-cent rally in new crop D's. So that's what you really want to see. You probably swept the bin already. So 14 cents higher, 6.26 is the price in that new crop D's. That's good stuff. How about soybeans? What's happening there? Well, soybeans are lower across the board here so far. Maize off 10 3/4 cents at 16.57. Big range, 54-cent range though. We've got a lower board by 5 3/4 cents in July to 16.27. But I want to see what's happening in the new crop. How about Novi 22? Let's see what that looks like when we get this technology to slowly but surely flip over. 14 3/4 cents lower, right? We're off 1% in price terms to 14.39 1/4. Get that, spit that out. Okay, how about wheat? What's going on over in the Chicago wheat? Loads of stuff to talk about, I'm sure. We're limit up in May, 12.09. Lock limit bid, 75 cents higher. Now, July is only 28 3/4. Can you believe it? Only 27 cents higher now. 11.43 1/4. But it's just an absolute big range of, say, about 83 cents today in that July contract. Boy, oh boy. How about hard red wheat in Kansas City? What's going on there? Well, May's up 51 cents to 12.01 1/4. It's not locked anymore. July's up 33.5 cents to 11.66 1/2. So I guess we should need to send out a bulletin. Hard red wheat is trading in Kansas City. How's that sound? Spring wheat in Minneapolis. What's been happening over there? That too is trading now. May's 27 cents higher, 11.45 1/4. But look at that, $1.20 as far as range goes in that spring wheat May contract. Boy, oh boy. 37.5 cents higher in July, 11.27 3/4. And then lastly, we're going to take a quick peek at cotton. It's having a tough day, 267 points lower in the May to 117.13. That gives us the opportunity to bring in Todd Horowitz from Bubba Trading. Oh, I was hoping you'd be in Vegas, Todd. I think the weather in Chicago is not too good, is it?
Yeah, I am in Vegas actually, but I'm on my way back to Chicago.
Well, that works. What do you think? What do you think about what's going on?
I think it's as nuts as can be, and I think it was fairly predictable. You and I have talked about this kind of movement for weeks and maybe months here. That we're expecting some pretty big movement, and the biggest fuel to the fire is Russia. First of all, with the third largest wheat producer in the world. And, of course, they have some key components for fertilizer, which prices are going through the moon, and you're seeing a lot of wild trade action. I mean, in everything. I mean, look at what's going on with crude oil and all the other commodities. I mean, this has been, one wild, crazy time, and it's not unexpected. These markets show up, and that's why we always recommend being hedged instead of trying to worry about it because, of course, you get the benefit from this upside movement, but the downside, you get protection. So I think this is, again, I think this is going to go on for quite a bit longer, Scott. In fact, wheat is priced in the near term up limit again Monday as it is now, but that can change, as you know, in 5 minutes. But for right now, based on the options, synthetically, they're priced much higher on Monday again. And again, I'm not surprised at the action. I think it's going to be crazy and it's going to be wild, which is why we don't need to watch tick by tick. Otherwise, you have a nervous breakdown.
Well, that's no true words have been said ever on this show. But I've been doing my own show, and I've been really kind of watching what these markets have been doing, and it's pretty interesting how they're shaping up. And they're shaping up to not really change a lot. I think that we're going to have an issue with food here for a little while. So we're going to be talking about this, I think, for a long time, Todd. So stay right there. We're going to go away, pay some bills. We're going to come back and talk with Todd Horowitz, who's on his way from Vegas to Chicago. We'll be right back after this. All right, welcome back. Market Day Report. Let's jump right in. I'm the Cow Guy. Cow Guy wants to see live cattle table. Let's bring that live cattle table up. And the live cattle table is, drum roll please, lower. April's off $1.75 to 136.60. Big range, $4 range, $4.50 actually. But we're kind of in the middle of it. So $1.72 lower in that April live cattle market. June's off $1.80 to 133.35. If we move over to feeders, what do we have happening in the feeder cattle market? Well, here we go. This one's ugly. April's off $2.65 to 157.87. Could be the fact that we've got higher corn board. But again, that's got another big range on it. It's, that's a $6 range. Wow. Boy, May's off $2.32 to 163.17. And then, drum roll please, lean hogs. What do we have happening in the lean hog market? It's taking it on the chin today. It's not a very happy Friday for lean hogs. April's off $3.75 to 101.45, and that's getting closer to the low than the high for sure. So we'll keep an eye on that one for you. May's off $4.05 to 106.45. Let's get back to our guest analyst, Todd Horowitz. He's with Bubba Trading, and he's en route from Las Vegas to Chicago. He does have cell phone service on his own plane, so that's how we're in touch with him now. But Todd, what do you think about the livestock market here?
Well, I think it's exactly what you and I have talked about for the last few weeks. I think cattle is going to be the first to struggle, which should bring some strength to hogs. And until today, the hogs have been much stronger. And again, listen, we get to certain prices, and the old saying is, right, high prices will cure high prices. I think cattle looks pretty weak. And again, when you look at the price of the pump, I mean, crude oil's up to, what, $20 this week? It's going to start to cut in to people buying beef if they can get it.
It was already cutting in. It was already
What's
cutting
that?
in. It was already cutting in.
Right. So it's going to cut in further, and I think this is the problem that you're going to see is people have to cut their budgets. The first thing to go is the more, normally it's normal everyday food, but now it would be considered deluxe.
That's what I was going to ask you. When does beef become a delicacy?
I think when crude oil is going to be, $4.50, $5 a barrel now. I mean, again, in Vegas, it jumped 50 cents in one day.
Right. So when you mean gas is $4.50 to $5 a gallon.
When you go to the pump and you got to pay, over $4, $4.50, $5, whatever, depending on where you live, I think that's kind of the limit where people say, you know what, I got to cut my budget. I can't afford this. I can't drive, but I got to drive for work. So what am I going to do? So I'm going to go ahead and cut my expenses somewhere else. And the first place to go is that I can substitute, beef for pork, and certainly go to hogs. And if I have to, I can go to chicken.
Well, that's where we're at. I mean, we got to end after this, but food and fuel are the two things that are leading this inflationary surge, and both of those, there really are no substitutes. That's the bottom line. So appreciate you being on the show. Have a safe travel there. That's Todd Horowitz with Bubba Trading. I'll bring it back to Nashville so I can throw this back to Suzanne.